Hello everyone, this is Martin and thank you very much for tuning into this video. It is the ABC Free Signals review from the signals I sent out on March the 28th to April 1st of last week. Okay, now take a look. The subtitle of this video is A Tale of Two Cities by the famous author and writer Charles Dickens. Okay, now, it was the best of times. It was the worst of times. This is the very famous first line from the book. It's the first line in the very first paragraph of the book, and I'm sure you've recognized it. It was the best of times. It was the worst of times. In short, it's a story about the intertwined lives of people living in two cities, Paris and London, set against the conditions that led up to the French Revolution and the Reign of Terror. It was a very interesting time in history, and if you're not familiar with it, then I suggest you Google this and learn a little bit more about what happened. It just seems like it really applies to the time that we're going through right now, similar to our world, which has been in turmoil for a few years. Now, Forex trading can be like that. It can be the very best of times. It can be the worst of times. In the previous week, as you know, trading was perfect with no losses. That's what I had, all winning trades. This past week, though, was miserable, and we couldn't even make one good trade. Yes, there's a lot of misery in the Charles Dickens book, but there's also a theme of redemption and good things happening in the book. We need to learn about losses in trading. It's how you react to losses. It's how you contain losses, and it's all about accepting losses, which is most important. Just don't go losing your head, okay? Just like here, you can see the guillotine here. Just don't lose your head worrying about it, otherwise you'll wind up getting your head chopped off under the guillotine, just like in the book. Oh yes, go read the book. Okay, enough said. Let's review this past week's trades. Okay, this is me again. My name is Martin. I'm the originator of the ABC Free Forex Signals, guys. And you can see I'm a very proud Canadian trader. Take a look over here with the red maple leaf. Guys, if you want to get your free signals without any obligation, there's no credit card, no forms to fill out or anything like that, just send me your email address, okay? And you would send it to right here. You can see MSKYJ 007 at gmail.com. I'll have a little bit more on this later. Okay. Now, before we look at the charts of the past week's trade signals I sent out, I just want to I want you to pay attention to my humble disclaimer. My free signal service is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific investment advice. And you can read further just by pausing the video. Okay, let's take a look. Let's see what happened in the week of March 28th to April the 1st, guys, okay? And first of all, we had two trades held over from the previous week, okay? You can take a look right over here. On March the 23rd, I sent out a free signal, and I took this trade, and I take all trades, by the way, so full transparency. Everything I show you, I take myself alongside with you. Okay, so the first trade signal I sent out was sell the euro against New Zealand dollar. Ended up being a big loss here for approximately 189 pips, guys. And price hit the stop loss. Okay, that and it's important to know that we take all of our trades. We do input stop losses or stop loss levels, so that's a very big part of our system. So in this case, you can see the New Zealand depreciated from the euro by 1.18%. Okay, and then also on the same day and date, and it was in the email, I suggested that gold would be a good buy. So it was a good, like for me, it was a good buy suggestion. I took the trade, guys, and it actually did go in profit by quite a bit. It did not reach the first take profit level, and then a couple of days after, it just completely sank, and it did hit our stop loss. So it was a loss. I'm going to consider this a loss. I did not take any part of the profit, guys. I held on to the trade, so I'm looking at this suggestion as a loss for 121 pips, guys, and price did hit the stop loss, and again, gold depreciated by 0.61%. Okay, so let's take a look at this recent week right here, guys. March the 28th, that was the Monday there. I sent out a signal selling the British pound against the USD. This also ended up being a loss for 96 pips. It did hit our stop loss. And guys, that's really important to know that normally we get out of a trade if it's in a losing position because we do apply a pre-sent stop loss. I do give you that information. We're going to look at the charts and I'll show you what I mean, but it did hit our stop, okay? And so you can see the British pound from the USD depreciated 0.72%. So 0.72% was the depreciation of the US dollar against the British pound. And then on the next day here, March the 29th, buy Australian USD. Now this trade is still open. Already in the last 3 trading candles, it went up quite a ways, but just did not hit our first take profit level. On the last trading day of last week, you'll see what happened. There is a bullish candle, so hopefully with this opening weekend, when trading starts again, hopefully it goes up and gives us some sort of profit. Okay, so that's the buy Australian USD. And so in the recent week, when you add up all these pips that we lost, guys, it looks like a very large amount, 406 pips. But again, it depends on whether you have your risk management process in place. The one I taught you a long time ago, and I keep talking about it week after week after week. We do have a risk management system in place. So we contained the losses to 406 pips. The currencies depreciated 2.51%. And so since I started keeping these statistics from the start of October 2021, guys, we've still made and gained approximately 3,893 pips. You can see that. And over the last 15 weeks, we've now, the currencies have appreciated 24.10%. That's really great still. And we're averaging right here, you can see 259 pips per week. So that's phenomenal, guys. If you're following my system, you are going to make money. We're going to have some occasional losses, guys. But all in all, we are on a winning track. Okay, so we're going to take a look at the very first trade. That's the sell Euro New Zealand. Let me just get to that right now. Okay. And you can see here, this is where we got in. Okay, let me just open up this window right here. This is when we got into the trade. This is what I saw. So again, guys, I've got a really unique system here to show you where we got in, why we got in. Take a look, guys. Everything looks great. And it looked like price was going to come down to at least this level here. Okay, take a look to your left. So here's our entry, 1.5777. Here's our stop, guys, 1.6030. Our first take profit, let me just take that out of the way. Our first take profit, 1.5723 right here. Our second take profit, 1.5684. So obviously I was expecting price to go down. Let's see what happened. Okay, and I gotta minimize this window. Okay, so this is our entry window. Let's take a look, see what happened, guys. And so we got in right there, okay, at the 1.5777, right there at the close of that candle. All of our candles close at 5 p.m. New York time zone, guys. It's important to know that we're on the daily. We're trading on the daily candles. We're not intraday. We're not scalping. Okay, so we got in right here, and I thought for sure price was going to come down to here. It didn't. The next day was kind of just a very tiny white a bullish doji, the next day another doji, you can see, and then finally the next day it went up right there, closed there. We, in the meantime, when price was here, we moved our stop loss from 1.60 down to 1.59. We want to now contain the loss and minimize it. And you see on this next candle right here, price went up and hit our stop loss. So automatically we got out of the trade without any further damage. Okay, so that was that. Now let's take a look at the next one, and this is gold, I believe. Yes. So I sent out a suggestion. It wasn't an actual signal because I did not give anyone the levels. I did not actually send out the entry, the first take profit, second take profit, or the stop loss. Okay, but just so that's why it was suggested in the email. And from my understanding and the feedback I got, not many people actually took this trade. Some did, but most I don't think did. So this is what happened. We got in right here at the close of that candle, or right there at the open of that candle, guys. Okay, and you can see price went up. Actually would have given us a really good profit for anyone that had taken the trade. I did not take a profit. I waited. Okay, I want to take this off. I waited till the next day to see if price would go higher, and I waited again. Price never went up to meet our first take profit level of 1976. In fact, this day it went all the way down. But in the meantime, I raised my stop 1914 up to 1931. So my stop was raised, okay, and right about there. So when price went down, it was stopped out right here. Okay, so just letting you know that yes, it was a loss. Again, we contained it, and that's really, really important. You've always got to understand that the number one rule in trading is to always protect your capital, okay? And there are many ways to do that. Using stop losses is just one of the ways that I teach you. Okay, so that is that. Let me take that off and let's go on to the next trade. This was on March the 28th, okay? I sent out a free signal, sell the British pound USD. So let's see what happened. I'm going to open up the entry window so you can see this is what I saw. So I saw a big black bearish candle. Here's the signal right there, guys. Everything looks good here, black and black. The black, these histo bars, they indicate momentum. So we have good downward momentum. Okay, and this is a cycle indicator. It's black, which means price is cycling down. Okay, so we did get in. Just letting you know again, here is our entry, 1.3084, our first take profit, second take profit, and our stop loss up here. Okay, so we got in at the close of that candle or the open of that candle, and price was already going higher. Okay, and let's just minimize that now so we can see the big chart. Okay, and right here, so we got in at the close of that candle, right there, guys. Okay, the next day, just like the other pair, Euro New Zealand, price started going sideways. We have a doji here, very, it went up or went down and then went up really high. Okay, so a big wide range for this candle. Okay. And like when I say range, I'm talking about from the open to the low to the high, back to, and we're talking about pips. So this was really a volatile candle ending up in a doji. The next day it went up again, okay? And I moved the stop loss down. And when I give you, I do give you this information about moving stops and all this. So we are managing the trade, and once you follow my system, you know what I'm going to be doing. So we lowered the stop from 132.28 to 1.3179 to in case price went higher, and it actually did on this candle right here. So when this candle was a doji, that's when we lowered our stop. Okay, just letting you know. But it was this candle. You see, this candle went from here all the way up here. and back down to there, and that's when we got stopped out. So another loss, but again, guys, we have a plan, and that's the most important thing, protecting our capital and staying true to our plan. Okay, so the final trade of last week, here's the entry window. Let's just open that up. This is what I saw. So I at the end of this bullish, you can see at the end of this bullish candle there, there's a signal right there. This was, and I may have to revisit this, but um, this was black, although the cycling indicator was still really up near the high level. The main thing I look at is as long as it's above the 50, we're still good to go, because often when price continues up in a trend, it may be white. It may be white, it may be black, it may be white, you know, with the continuation. But in this case, it was black. Okay, so just letting you know. The next day, it actually did go up for. It was in profit, guys. So the entry was 0.7507, but it did not reach our first take profit level of 0.7545. So I obviously sent out an email the next day saying just keep the trade open. Okay, you've got to have patience when you trade Forex. We are trading on the daily charts. Again, we're not scalping. We're not being worried about whether price goes down and goes against us or anything like that, because most often price goes in the direction that I'm forecasting and giving you the trade signal. And guys, I've had very close, or approximately an 80% winning rate, so nothing to fear there. This week didn't go the way I wanted to, but that's okay. So let's take a look at the big picture. Here is the big chart. We got in right there, guys. Okay, the entry was right there. Okay, and let me just take that off. At the end of that candle or the beginning of the next one, it did go up. You can see the next day, on the Thursday, it went down and it was a bearish candle. And then the next day, the final trading day of the week, we have a bullish candle again. It's a weak bullish candle, but we're hoping that price can go up and at least hit our first take profit target of 0.7545. So the trade is open right now. We've got to wait until the market session opens up again this weekend on Sunday, and then we'll see what happens Sunday and Monday. Okay, at the end of that trading session. So that's with the trades there, guys. I always end up with or giving you an inspirational message. And guys, I want to give out a big shout out to my trader friend in Toronto. His name is Saman, okay, and he's been with me for about 9 years, right from the beginning when I started teaching in a classroom setting in Toronto, and he always gave me heck for mispronouncing his name, so hopefully I've said it the right way this time. Saman, okay, and he sent me these quotes from a very famous trader teacher, Mark Douglas, from his book, Trading in the Zone, and I'm sure many of you are familiar with this book. It's an excellent book on trading, focuses mainly on the psychology of trading and things like that. So they are, these quotes right here, they are his universal truths about any kind of speculative trading activity. He wrote, and this is super important, guys, for you to understand in spite of having this terrible week, and that's why I'm sharing this with you. Okay, so anything can happen, and that's true. I've been teaching for about 9 years, and I've said this many times in the past. When it comes to trading, anything can happen at any time. Now, every moment is unique. Again, things don't go perfectly, and you never know when something unusual is going to happen. And that is called a unique moment in trading, which could perhaps change the course of trading for the next couple of days. Okay, there is a random distribution between wins and losses on any given set of variables that define an edge. Okay, so that's important to understand. So there's going to be a random distribution. You may have You may go through a period of having more wins than losses. You may go through a short time period having a few more losses than wins, okay? But this is this is the important one right here. You don't need to know what is going on to happen next to produce a consistent stream of income. Why? And this is what's really important. And this is what I keep hammering at you guys. I want you to understand this. I really believe this. Every trade setup that matches strategy has to be taken. That's the way probability works. Okay. So over over the last year, I keep saying, take all my trades. All my trades means don't try to figure out what I'm doing. Don't try to figure out or overanalyze a trade that I send out to you and then decide not to take it. I mean, for the probabilities to work and for you to produce the same kind of high winning rate as I do, you've got to take pretty well almost every trade setup I send out to you. Okay, so this is what this famous trader teacher is telling you from the book, Trading in the Zone. Many of you have read it, guys, and I suggest you look it up on the internet and perhaps even go out and get it and start reading it. It's going to help your trading, that's for sure. Okay, so VIP members, I just want to let you know, VIP members are getting a separate video lesson on the truth about Forex risk. It's a must-see video for all traders, whether you have a small or large trading account. Okay, so that pretty well wraps it up, guys. My free signals are available to anybody that wants to email me. Again, no obligation, no form to sign, no credit card. Just send me your email address and tell me what city you're from or what country, okay, with your first name. I would really appreciate that. Now, there's no obligation. I mean this, it's totally free. Send your email with your request for my free signals to mine right here. Again, my email, you can see right here, is mskyj007@gmail.com. Okay, once again, send your email to mine, mskyj007@gmail.com. Okay, thank you very much, guys. Cheers from Canada. Talk to you again in the next video. And as always, we're trying very hard. We're going to give you some really good results next time around, and take care. And if you're brand new, don't forget to subscribe. And especially everyone who watches this video, can you please click on the like button? I'm sure you're gaining information and education from every one of my videos. So I would really appreciate it if you can do that. Click on the like button below the video. Take care. Bye for now.